Ladies and gentlemen, good day and welcome to the Q4 and FY24 S.P.Apparels Ltd earnings conference call, hosted by Elara Securities India Private Limited. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Preghna Jhunjhunwala from Elara Securities India Private Limited. Thank you, and over to you, ma'am.
Thank you, Sejal. Good afternoon, everyone. On behalf of Elara Securities India Private Limited, I would like to welcome you all to Q4 and full year FY24 post-result conference and business update call of S.P.Apparels Ltd. Today we have with us the senior management of the company, including Mr. P. Sundarajan, Chairman and Managing Director, Ms. S. Shanta, Joint Managing Director, Mr. S. Chenduran, Joint Managing Director, Mrs. S. Lata, Executive Director, Mrs. P. V. Jiva, Chief Executive Officer, and Mr. V. Balaji, Chief Financial Officer of the company. I would now like to hand over the call to the management for opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I welcome you all to our post-results conference call for Q4 and FY24 results of the company. I hope all of you had a chance to look at our investor presentation that is uploaded on the company's website and stock exchange. India's textile industry is on the rise, benefiting from significant global shifts. The China Plus One policy is driving businesses to diversify, with India emerging as a key player. At the same time, concerns in Bangladesh are leading international customers to seek stability and have begun to shift their focus on India and Sri Lanka for manufacturing. These trends are setting the stage for India to enhance its role in the global market. Let's talk about the garment division. I am pleased to provide an update on our garment division. Our strategic approach has been twofold. We have continued to grow our established kidswear business while simultaneously diversifying into the adultwear and innerwear segments to accelerate the company's growth. We are not just sustaining our momentum in the kids and the baby segment. We are actively expanding it with a new project in Shivakasi. The pilot for this expansion is set to commence in June, with the main factory expected to be operational by the third quarter of FY25. In terms of capacity growth, we are employing a multifaceted strategy. This includes acquiring additional production capacities for new products and expanding offshore production in Sri Lanka alongside growth in our existing facilities. Our operations in Sri Lanka are already yielding results, with 2 customers' orders currently in production. Furthermore, we have received concurrence from a major customer to proceed with operations that promises to be a significant business opportunity. By the end of this financial year, we anticipated having 1,000 machines, including those from SP UK, in addition to S.P.Apparels India, fully operational in Sri Lanka. The potential for growth in Sri Lanka is substantial. Our customers are eager to shift some of their businesses away from China and reduce their dependence on Bangladesh too, due to the economic unrest there. This shift is creating an increased demand for our services in both India and Sri Lanka. Additionally, to meet the rapid increase in volume demand from our customers, we are offering them the full capacity of our Sri Lankan operation. We expect this to drive significant growth in the coming years. Additionally, through the acquisition of the company Young Brand, we have added 2 new customers to S.P.Apparels Ltd, which aligns with our cross-selling opportunities. This is a testament to our commitment to expanding our customer base and enhancing our market presence. In our garmenting division, we are seeing a healthy increase in both our order book and capacity, which is growing at the rate of 7 to 10%, without considering Sri Lanka. The current order book is 389 crores. Commenting on our garment division performance, the adjusted revenue stood at 938.4 crores with EBITDA of 165.5 crores and EBITDA margin of 17.6%. The utilization stood at 78% compared to 72% in FY23. With regard to young brands, I am excited to announce that we will be completing the 100% acquisition process of young brand apparel before the end of this month, marking a significant milestone in our expansion journey. There are many barriers for entry in the innerwear sector, and we were able to enter this industry through young brand. Our customers are looking forward to ordering from us once the acquisition is complete. We are seizing cross-selling opportunities by targeting young brands' American clientele for our children's wear segment, while also pitching our existing children's wear customers on the young brand innerwear range. We have already begun to expand our customer base through these cross-selling initiatives. This strategic move is poised to strengthen our position and catalyze growth in the dynamic apparel industry. With regard to textile division, that is spinning and processing division, in our spinning segment, we are witnessing a stabilization of cotton prices, presenting us with a promising opportunity for bottom line improvement. Moving to our dyeing facility, I am proud to report that it is operating at full capacity, reflecting the high demand for our quality services. Regarding retail division, during FY24, SP Retail Ventures recorded revenues amounting to 82.9 crores compared to 80.6 crores in FY23. In our retail division, we are exiting from head brands shortly. To further fuel our growth and capitalize on emerging opportunities, we are considering engaging with strategic or financial partners, a move that will strengthen our footing and enable us to scale new heights in the retail landscape. With regard to S.P.Apparels UK Ltd, for FY24, SP UK's revenue amounted to GBP 5.48 million compared to GBP 5.98 million during the same period last year. The current value of our order book stands at GBP 2.7 million. SP UK has navigated through the challenges posed by the cascading impact of COVID-19 with resilience and strategic restructuring. Our dedicated team in London has worked tirelessly to steer the business back to a path of robust performance. As a result, we are now in a strong position and are planning to double our business by FY25. By the end of this quarter, we anticipate having 5 customers for SP UK, reflecting our growing market presence. Furthermore, our efforts are geared towards doubling our top line by FY25, with our operations in Sri Lanka playing a crucial role in supporting this ambitious goal. General outlook, I would like to add that as we look to the future, our prospects for substantial growth are bright across all divisions. The kidswear division, a cornerstone of our business, is set to expand with additional capacity and 2 new major customers. Coupled with our foray into the adult innerwear segment, we anticipate a significant increase in our market share. The acquisition of young brands is a strategic move that allows us to enter the innerwear market, broadening our product offering and propelling our growth trajectory forward. In Sri Lanka, we see boundless potential with a high demand and plentiful labor, allowing us to rapidly scale up to 2,000 machines in the near future. For our SP UK division, we are focused on doubling our top line in FY25, capitalizing on the significant opportunities ahead. We are also in the process of implementing the ESOP scheme, pending shareholders' approval, which will further strengthen our business model. This is a time of transformation and expansion, and we are fully committed to seizing the vast growth prospects on our horizon. Thank you, and over to Balaji, our CFO.
Thank you, sir. Good afternoon, everybody. I'll just run you through the financial performance of the company. On a standalone basis for the quarter Q4 of FY24, the adjusted total revenue stood at 254 crores, which is at a growth of 9.3%. Adjusted EBITDA stood at 38.5 crores, which is at an EBITDA margin of 15.1%. And PAT for the current quarter stood at 26.84 crores, which is at a growth of 15.3%. On a standalone basis for the whole year, we have done an adjusted total revenue of 938 crores and an adjusted EBITDA of 165 crores with a margin of 17.6% and with a PAT of 103 crores at a growth of 13%. Our EPS stood at 10.7 per share for the current quarter, and EPS for the whole year on a standalone basis stood at 41.4 per share. On a consolidated basis, our revenue for the quarter stood at 294 crores, which is at a growth of 7.8% year on year, and our EBITDA stood at 38.92 crores at an EBITDA margin of 13.2%, and our PAT stood at 28.4 crores with a growth of 38%. For the whole year, we have done an adjusted revenue of 1,077 crores and an EBITDA margin of 155 crores, which is at 14.4%. PAT stood at 89 crores, which is at 8.6 growth rate year on year. Our EPS for the current quarter stood at 11.3 on a consolidated basis, and EPS for the whole year stood at 35.7 per share. On the performance of segment-wise performance on adjusted revenue, our garment division revenue stood at 264 crores with a 38 crores of EBITDA, which is at 15.1%. This reduction in EBITDA is purely because of air freight that happened during the current quarter due to the inefficiency of labor. SP UK revenue stood at 14.06 crores for the current quarter with an EBITDA of minus 72 lakhs, which is purely because of the overheads which has been occurring due to the change in the office premises. And retail performance for the current quarter stood at 25.36 crores on the top line with a marginal EBITDA of 40 lakhs for the current quarter. For the whole year, our retail performance was 82.9 crores with an EBITDA negative of 8.19 crores. On the current debt position, our long-term debt stood at 91 lakhs, which is very, very minimal, and working capital stood at 101 crores. So total gross debt is 102 crores, and cash and cash equivalent is 59 crores on a standalone basis, and our net debt as on 31/3/2024 is 42 crores. On all other information are available in the website, and I would request to take up question straight away.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Agrawal from Carinil Capital. Please go ahead.
Sir, thank you for the opportunity and congrats on a good set of numbers. My first question was on the outlook for the garments business. Like, how is our interaction with the customers in Europe and US? Like, are we seeing a revival in demand? How do you expect the demand to pan out for FY25? Like, more towards H2 of FY25, or like, do you see good demand basically starting from Q1 of itself?
Very good demand. Yes, as I mentioned in my speech that the customers are looking for, number one is the consolidation of the suppliers. That's a key thing most of the retailers are doing of late in the last about 5 to 10 years time. So definitely they will cut down the number of suppliers who are underperforming or small or non-vertical setups, and they will move the business to much bigger in size, backward integrated, and the long-term associated factory. So definitely we stand to gain because we are the preferred supplier for all our customers. In addition to that, this anti-China sentiment, Europe, UK, and the US. So we always stand to get the opportunity of diverting some of the businesses from China. Now, in addition, even Bangladesh, the European, American, and the UK customers, they want to mitigate the risk of diluting the concentration of sourcing from Bangladesh because too much of orders have been placed in Bangladesh. If they find it too risky, so that also starts moving to India and Sri Lanka. So as such, we don't see any order booking difficulties in the near future.
Understood, sir. So on our normal traditional business, what kind of volume growth are we targeting for this year in the S.P.Apparels business?
Can you come again, please?
I'm talking about our traditional business, like what kind of volume growth are we targeting? I'm not talking about the acquisitions we have done out of Sri Lanka unit, which we are basically focusing on. On our traditional business, the existing factories we have, what kind of volume growth are we targeting for FY25, sir?
As MD, as per MD speech, we are targeting for 7 to 10%, excluding Sri Lanka this year. And once Sri Lanka operation is through, there will be an additional value.
We expect between 100 to 200 crores of business in this FY25.
From Sri Lanka?
Yes, FY26, sorry. FY25 because, the effective shipments will start from third quarter onwards. Second half only.
Understood, sir. So now coming on the capacity utilization, like earlier we had guided for 90% kind of capacity utilization by Q4, but we have achieved 76% only. So like, what is the challenge here and like how are we looking to resolve this going forward?
We have achieved 78%, but it is continuously improving, and I'm sure by end of FY25 we will be able to reach 90% efficiency. See, because in between there are some disturbances with regard to the election things and a lot of things, so the people did not turn up, and now the things it's settling down. So from now onwards, we are expecting workforce inflow much better now. So I'm sure by end of financial year we will be able to achieve between 85 to 90%.
Understood, sir. So next question was on the garment division margins. Like for this quarter, we have reported 15.1% margins. So like we used to do 18% kind of margins before, and our guidance used to be around 18 to 20%. So like what impacted our margins this quarter, and what kind of margins should one expect for next year?
So, Aman, if you were recollected in the speech, it was informed that there was some add shipments that happened during the current quarter because of higher inefficiency
and Red Sea
issue. So I think this quarter is we have had taken a hit of around 4 crores on the air freight. That's put down our margin to an extent of 250 bits for the current quarter. But still, our guidance on the margin will be at 18%, and we continue that the 18% can be sustainable for the whole year. Maybe this quarter there is a reduction in margin this quarter, but when you look at year-wise, our EBITDA margin is closely to 18%. We are at 17.67%, which is close to 18%. And even for the next year, we are guiding for an 18% EBITDA margin for the whole year.
Understood, sir. That's really encouraging to hear. The next question was on the retail business. We have delivered positive EBITDA margins for the first time in last few quarters in this business. So what basically drove this improvement in margins, and like, was there any one-off which led to this kind of positive margins for us in the retail business?
No, if you look at the turnover, we have done 25 crores of turnover for the current quarter. So whenever we do 100 crores for a year, we are breaking even at the EBITDA level, and that is what is reflecting in the numbers. When you look at compare it year on year, we have done close to the same number. But last year, the yarn prices were high, so our margins were on the lower side. But now I think we are back on the margins, on the gross margin level, we are doing well. And that's why you see that EBITDA is positive. Once we do 25 crores, the back office expenses, which is purely the fixed overheads, are getting diluted in terms of the margin.
Understood, sir. So for FY25, how to think about the retail business? Like, do you expect to achieve 100 crores kind of turnover in that business and be EBITDA breakeven, or like, how should one basically think about retail business in next year?
So two things in terms of FY25. One is that we are looking at 110 crores of top line for FY25. That itself will definitely bring the EBITDA positive for the retail division as a whole for the whole year. And in terms of the non-performing head, as our MD has suggested, has informed that we are exiting head by December 2024. So it's a new brand which has come and it is not performing, and we are exiting that. That also will start yielding better margins going forward. So I guess these are the two things which will guide us going forward in terms of top line and EBITDA margins.
Understood, sir. So in terms of tax rate, in this quarter, we had very negligible tax rate. So what was the reason for that? Like, we just had 1 crore of taxation for this quarter.
Tax rate for the current quarter, because retail, we have taken deferred tax asset for the full year. So which is close to around 3.5 crores. So that's why there is a reduction in the tax rate.
We have booked deferred tax from the retail business, right, sir?
Yes, deferred tax asset.
Right. Got it. So I'll come back in the queue, sir. Thanks a lot for answering my question.
Thank you. The next question is from the line of Shubham Sunil Jain from NV Alpha Fund. Please go ahead.
Hello. Am I audible?
Yes, sir, you're audible.
Yeah. Thank you so much for the opportunity. I just had one question. So you mentioned that there are two things that we're doing. One is, creating a presence in Bangladesh, and the second thing that we've done is the acquisition of Young Brands, which has given us access to innerwear. So I just want to understand that, from our existing customers itself, what kind of, wallet share opportunity does this open up for us? What is the amount of garments, if you have an estimate that they're sourcing from Bangladesh, and what kind of innerwear sourcing are they doing across India and Bangladesh?
See, already in the innerwear, Young Brand we are already our capacity being used for, I think, about 67%. So for the remaining, we will be bringing in our existing customers who will be ready for placing the renewal business to young brand. So which means, that easily this capacity can be filled. So there is no question of how much quantities or something, because their expectations are very big, but our requirement is small, so it is not a big deal. And today the business is, because of the consolidation, the customers are willing to give us as much business as we want. So only the capacity needs to be grown. As we grow the capacity, we will be getting more businesses, more orders. That's the reason why we are acquiring new factories, running factories, and we are also stretching up to Sri Lanka for additional capacities. Which means that we have the definite businesses from our customers, based on which we are extending our arms to new factories and the offshore production.
Got it. So in young brand, yeah, sorry.
Excuse me. And also, you were talking about the Bangladesh product. The product what they are trying to divert from Bangladesh is the same kind of product which we are already doing.
Understood. So first, I have a follow-up question on young brand. So at full revenue potential, what is the kind of revenue we can do from the existing facility that is there?
So the closing.
The potential, if you do one shift, we can do 1,250, 1,300 crores of revenue on the garment division.
Young brand.
And in terms of young brand, I think we can do closely around 450 crores with the current capacity.
Understood. And how much more land is available over there for us to scale up? Can this 450 become 1,000 in young brands itself, and just in terms of capacity?
I think the land is sufficient enough. We have 24 acres of land there, and the what is being utilized is only 7 acres. So land is not a constraint.
Understood. And a follow-up question on Bangladesh. So I understand that we're doing the same products, but our existing customers, if they're procuring, say, 10 rupees worth from India, are they procuring like 50 rupees worth from Bangladesh? And is that the kind of opportunity that is opening up for us because we're establishing a presence in Bangladesh?
Can you come again, please?
So I just want to understand how much more wallet share can we gain in our existing customers just because of our setting up capacity in Bangladesh?
Wallet share from the existing customer for diverting from Bangladesh.
No, that is, see, it all depends on the capacity what we offer to them. See, if we offer them, say, another 1,000 machines, then probably they will increase by monthly another 1 million pieces. So that's the kind of underwriting, with our customers.
Understood. So what is the kind of capacity that we're putting up in Bangladesh in terms of revenue potential?
We are not putting up anything in Bangladesh. See, they want to de-risk their concentration in Bangladesh, so they will divert to India and Sri Lanka.
Understood. Okay.
We have additional capacities in Sri Lanka, not in Bangladesh.
Understood. No, I don't think I have any other questions. Thank you so much.
Thank you. The next question is from the line of Rehan from Equity Capital. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yeah, very much, yeah.
Thank you. I just wanted to know what is the contribution from spinning for this quarter first?
What contribution?
Spinning division.
Spinning division is, in terms of the EBITDA level, it is close to around 40 lakhs profit.
40 lakhs profit for the quarter?
Yeah, EBITDA level.
Yeah. Understood. Second is that, considering that, you're targeting 90% kind of capacity utilization, 85 to 90% capacity utilization from your core business by FY25, what is the optimum capacity? Is 90% sort of the peak, or then you'll have to de-bottleneck? How does that function?
That is all the time. It's now we are in 78%, so gradually we'll ramp it up to 90%. So it will be all the time. Throughout the year, that capacity will be maintained.
Okay, so then other than that 90%, then you'll move to Sri Lanka for further business. That's correct? Understanding?
No, that is parallelly happening. See, why we are going to Sri Lanka is for a sudden increase because the customers want us to take more business, and the bottleneck here is the capacity. So they are permitting us to use the capacity out of Sri Lanka, where they are also benefited by duty-free thing, and we are also benefited by extra business. So that the Sri Lanka operation will give us immediate jump to up to 100 crores in this financial year, and next year maybe 200 to 300 crores increase. But parallelly, we will also be increasing our capacity to 7-10% of the capacity year on year. So that will also happen. And the third one is we are putting up our new factories in Sivakasi. That will also be added on to our India capacity. And acquiring this young brand is additional capacity of 1,800 machines. That is also added on to this one. So we are making the efforts on the four sides: the existing continuous improvement, offshore Sri Lanka, and acquisition of young brand, and one or two more factories we are still looking for, and the new projects.
Understood. Thank you for that. Third is that the competitor who is in a similar product mix as you gets better price realization. So just wanted to understand, do we foresee any better realizations going forward, or why are they getting better realizations versus us? Because they are in similar business segments.
As I mentioned in my speech, we are now looking for adult products also. So that is the reason why we are looking at adult products. So this will improve the average price realization. So this will happen over a period of time.
Understood. And can you help me understand what is the current open exposure for your forex position?
Open exposure forex. We are covered until 94%.
So I couldn't hear you. Could you repeat?
We are covered until 94%.
Up to
96% is open.
Okay. And just to clarify, your guidance for volume on the core garment business will be 7 to 10%. Is that correct?
Correct.
Yes.
Correct.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Pinkesh T from Profit Gate Capital. Please go ahead.
Hello. Yes,
So, may I request you to use your handset, please?
Yes, am I audible now?
Yes.
Much better.
Yes. As you could see, from FY23 to FY24, we are in a flattish mode. We have grown just 0.9%, and while our export volumes are stagnant from last 2 quarters. So, this growth of just 1% and the exports growth at flattish mode, is it because of the rising cotton prices and the inflation, and not in the there is no clue that I can conclude that there is a volume growth and at the business side. So what's the company's view on this?
Yeah, actually, when compared to 22-23, there was an increase in capacity, but although there was increase of 5 to 7% increase in capacity, the average rate, because in 22-23 the yarn price was on higher side. When compared to that, in 23-24, there is a difference of 3 to 4% reduction in the overall value, which had hit on our overall sales, and also the efficiency, because we started recruiting more number of migrants, so there is an efficiency drop of 5%. So we took a hit of 8% in the sale. Otherwise, you would have achieved. So there is a flat revenue we got. Otherwise, you would have achieved 8% on the sale. That is the main reason.
Okay. Okay. Fine. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Akash Kothari from JHP Securities. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
So may I request you to use your handset, please?
Am I audible now?
So your voice is very less. Are you near to your mic?
Yeah, one second.
Yeah.
Audible now?
Yeah.
Yes, sir.
Yeah. So just wanted to know, we have guided for 7 to 10% volume growth. This is after factoring in the FTA, because it's very much likely that FTA will be coming in this year itself.
So with respect to FTA,
nobody
to comment on that. Because
nobody knows. Maybe after the new government form, they will again initiate it.
Actually, July 4th, there is a election in UK, and after new government formation in India and new government formation in UK, again we will have to start from first. So we don't want to comment much on FTA.
So let's not talk about it, and let's work considering no FTA. That's how we have started working.
Okay, so 7 to 10% is excluding FTA, which could be much more in case FTA comes in this year itself.
No, see, FTA has no impact for us. It could be an impact on the margin to an extent of 100 bits. That could be the only factor.
Yeah.
To
be honest, even without FTA, the business from China and Bangladesh is diverted. So I don't think India has enough capacity to face that kind of volume of orders. So FTA has got no impact at all at the moment for India. Let's say if FTA comes, the duty-free benefit will be passed on to the customer. They will not be benefited. So that will be helpful only when India is want of orders. But that's not the case today.
Okay. Understood. Yeah, so that's it from my side. Thanks a lot.
Thank you. The next question is from the line of Keghna Jhunjhunwala from Elara Securities India Private Limited. Please go ahead.
Thank you, and congratulations on good set of numbers. Just wanted to understand your demand scenario much better, because we're talking about 100 crores of revenue from Sri Lanka this year and 7 to 10% growth in garmenting. On an overall basis, how do you see demand shaping up? Are customers giving you price hikes in current scenario, or they are just willing to give more orders at a reduced price? And how is the profitability panning out in both the segments, both Sri Lanka and India? You could just help on that.
Yeah, it's like this. The prices from customers will continue to be under pressure. Nobody will increase the price unless otherwise there is a big shock. In fact, when the yarn prices shot up, everyone considered a little bit of contribution. But otherwise, every season there will be a pressure on the prices. So we will never think of increasing our selling prices. That's for sure. So we have to mitigate this in so many ways internally, by maintaining the material cost, the overheads, and the labor cost, the efficiency. A lot of things we need to do. And for our fixed overheads here, had it been say instead of 1,000 crores, if it is 1,500 crores of business, the margin would have improved, because the most of the things are fixed overheads over here. So that is one of the reasons why we are taking Sri Lanka business also, which will help us bringing, it's not this kind of margin. There will be definitely reasonable margins will be brought to our whole S.P.Apparels umbrella, S.P.Apparels company. Even if we say in the next 2 years' time, if it is 200 to 500 crores in 3 years' time, so automatically the existing overheads will take care of additional 500 to 1,000 crores. So that is the only way we can improve the margin. And the volume, the capacity increases, the negotiating power with the mills, with the dyers and everything, that will also help us.
I would like to add one more point here. First year for Sri Lanka operation will be 100 crores, and second year it will be 200 crores, not for FY25. So it's 100 crores for the first year of Sri Lanka operation.
Okay. We start from H2 of this year.
Yes, correct.
Okay, understood. And sir, I wanted to understand the Sri Lanka operations a little more in detail in terms of which customers, your existing customers, new customers, where are these orders getting booked, India, SP, UK? some clarity on the customer profile of SPUK of Sri Lanka business that is being run today and expectations on that business.
It's only the existing customers. Only the existing customers, they want to place more business with us, but because of the capacity constraints, they are allowing us to produce from Sri Lanka. So only the existing customers' business will increase. And we are open for increasing customer base by adding few more new customers. After we have acquired the end brand, so we are taking those customers also for our products. And also some of our customers will go to the end brand for the undergarment work. So it is only existing customers for S.P.Apparels and the end brand at the moment.
Okay, understood.
And the UK customer, SPUK, 3, end brand customer, SPUK customer and S.P.Apparels customer.
Okay, understood. And with this, what is your current capacity in terms of machines today?
Close to 5,000 machines.
5,000 machines. And we are adding 1,000 machines this year in in Sri Lanka.
Yeah.
And in India, Shivakas will be around 500 odd machines.
Yeah, correct.
Okay.
And the end brand is 1,800 machines. 1,800 machines of the end brand.
Okay. This is their total capacity for FY25 end of the year.
Available. Yes, available.
Yeah, available by the end of the year. Okay, understood, sir. And then we look at more capacity expansion in Young Brands and Shivakasi, in Sri Lanka, and when you are fully utilized over there.
Exactly. You got it right. Yeah.
Okay, understood. And sir, Sri Lanka will be job work or manufacturing, all the efficiency and everything will have to be looked by you or by the partner?
See, it is like this. For SPUK businesses, it is on FOB basis. They place the order and they supply it. And for S.P.Apparels India, it is a job work, only CMT. We send the materials from here because Sri Lanka is not indigenous to produce any of the raw materials. That's the way the country operates for this industry. So it will be on a CM, that is a job work basis.
Okay, understood, sir. Thank you, sir. This is a lot of clarity and all the best for strong growth in the coming years.
Yeah, thank you. I think you asked very, very good questions.
Thank you, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Aman Agrawal from Carnelian Capital. Please go ahead.
Thank you for the follow-up. Just one clarification.
Sorry to interrupt you, sir. May I request you to please use your handset?
Is it better now?
Yes, sir, much better.
Sir, in terms of debt, after this acquisition, where do we stand after, currently we have net debt of 42 crores. After the acquisition, plans we have, how do you think the debt will move for next year? Just wanted to clarify.
I mean, what we have done is that all the investments that was placed for the purchase of this acquisition has been diluted and we have closed down all our packing credits. So I guess once we complete the acquisition process, our debt could go close to net debt, including packing credits, can go up to 150-160 crores.
Understood, sir. Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. I now hand the conference over to the management for closing comments.
Thank you. I want to express our sincere gratitude to our shareholders, customers, and dedicated team for their continued support. We are excited about the path ahead and remain committed to delivering sustainable growth and value. Thank you for joining us today, and we look forward to sharing our future success with you. Thank you and have a good day.
Thank you. On behalf of Elara Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.